Alas, Bitcoin Cash is approaching its target to the downside. And while it seems to be taking a bit of a breather, I don't think we're quite done yet, but this is finally giving some signs that we may be approaching a bottom pretty quickly. Bitcoin Cash, along with the rest of the crypto complex, is getting closer and closer to bottoming. We may already have a bottom in equities. As a matter of fact, this the SP 500 futures. We've been looking at both simultaneously because they've been correlating very, very well. They've been moving in lockstep, at least in terms of inflection points where you have big shifts in sentiment. So right now, this is the 1 hour Bitcoin Cash chart. We're sitting at about 223, and our third wave target to the downside was about 216. So I will call the third wave done. We're going to come back to that in just a second. Going back to our history, we have a major support set at 260, and that was the low that we hit earlier this year on February 24th. And we had an upside setup, 3 waves as notated in orange. We're looking for a 4th wave pullback, which looked pretty clean, and it looked like we had our 5th wave coming, and then we took a turn for the downside. And of course, I exited half my positions when I saw the setup developing with the intention to buy the dip. So we are finally getting that dip right now, and I'm looking to deploy my cash to buy back in at a lower cost level. So as I mentioned, we're very likely in our third wave down. We have a first wave down, second wave up, very standard looking. It was just actually exactly a 61.8% retrace. That's the ideal retracement point for a second wave before we continue downwards. And you would expect our third wave to get to the 1.32 extension, 216. We have spiked just past that. Could go down to as much as 192.66. That's the next Fibonacci down. Either way, we have gotten to that point. And again, we are consolidating. This looks sufficiently like a third wave. When we look at our MACD, we are stretched quite far to the downside. That's what you want to see for a third wave bottom, because typically after you have your third wave end, you have a 4th of consolidation, and your 5th wave lower often has a divergence in the MACD. So we're going to see if we get that kind of action. I'm going to shift over to Bitcoin and Ethereum real quick just to compare the action to the downside. And here too, Bitcoin definitely looks like it hit its third wave target. So don't be surprised if we consolidate here for the next couple of hours, maybe a few days. We're going to see how the timeline shapes up. And Ethereum, the other big crypto, same thing. I don't have the notation here, but we did actually, we've spiked down exactly as we did in Bitcoin Cash. So we have sufficient depth here to call our third wave down finished for the C wave. Now, when it comes to redeploying and buying your tranches, depending on what your strategy is, most of you are probably going to be better off holding. Most of you probably are. It's very difficult to time getting out and getting back in. I'm attempting to do it, but I also have very specific parameters. Some of you may have sold coins like I did just to reduce your exposure in anticipation for the downside risk. Typically, if you are trying to buy in tranches, trying to diversify your purchases, it is best to start buying at the bottom of the third wave. So if you would like to buy a tranche here, it's probably a good place to buy. As I've reiterated in my previous videos, there's no guarantee that we get a 4th wave bounce and a 5th wave down. Oftentimes the 5th wave is truncated. Maybe it doesn't go all the way down. Maybe it's even shorter than the third wave. That would be your typical, well, not typically, your unorthodox top, in this case, a bottom, where you have a truncation. We've seen that kind of thing before. So that is why it's advisable to start buying here. Otherwise, we're going to be looking for a sign that we have bottomed. The thing I usually look for is a 5-wave impulse up, as I have drawn in red here. So we want to see some kind of an impulse. I'm going to estimate that we get somewhere between 353 to about 391. Typically, you see some symmetry, almost like a reverse head and shoulders pattern whenever you see this thing developing. So if you look at this as a shoulder, that's the head, neckline, shoulder again. I think I'm getting this totally backwards, but you guys get the idea. Basically an inverted head and shoulders, inverse head and shoulders pattern would be a very clear sign of a reversal in traditional TA, technical analysis. In Elliott wave theory, we would call that a 1-2. So you'd see an impulsive wave up, 5-wave structure, and a 3-wave correction down. And once you have your correction, we want us to get through the 0.618 and 0.764 extensions, which we don't know yet because we haven't started rallying, but that would be basically what we call a confirmation that we have bottomed. So that would be your next safest place to buy. And the safest time to buy would be once we get back up here, in this case, in this demonstration at 357. But again, we got to watch this thing develop. I do still expect us to go a bit further down. So expect our 5th wave to go down to maybe 178 or so. Could extend down to 154. Comparing that to the big picture chart, that more or less aligns. I had 185 as the lower target. So that is a little bit shallower than what you expect here. but it's within a few dollars of the targets. So very basically a drop in the bucket. It's not much of a difference in our big picture chart. On our big picture chart, I haven't changed too much. I probably should have swapped these around. I will before I post this video, but red is obviously our primary because we broke support. So I'll get this shifted, swapped before I release the chart. When we look at our MACD, we are still maintaining a divergence. So that's a good sign that we are approaching a bottom. And our most common equivalents, our most common Fibonacci extension level for a C wave is basically a 1.0 extension, meaning that from the A wave bottom top to the A wave bottom, B wave top, if we build a Fibonacci extension, 185 is our ideal retracement point. I wouldn't like to see us go too much lower. Sometimes you have some just really ugly bearish sentiment to finish things off. So I would expect our bottom to be no lower than the top half of this box. So we could extend on a 130 or so, but I really don't see that as a high probability at the moment, especially if we have this consolidation start up, our fourth wave, maybe into the overnight hours. In addition, we could also draw a Fibonacci on the smaller scale because this should be a 5-wave pattern, which is what we are seeing at the moment. So if we take that top, this as a 1-2 to the downside, gonna zoom up just a bit, make this a bit more clear. We are projecting, well, we've already gone past our ideal projection. If we build that Fibonacci sequence from a little further down from the low that we hit in, I believe that was December. Yeah, December 4th. I'd say that looks more like a corrective wave. Maybe we finish in a double zigzag. Either way, there's some confluence somewhere in that box. That's what I expect us to see. So what to expect next? As I mentioned, expect some consolidation for a fourth wave bounce. That is a lot of clutter. I'm going to clear that. Fourth wave bounce, fifth wave lower. How long will the fourth wave take? There's no telling. Our second wave took, let's see, from April 11th to about April 14th. I'm not sure if that was a weakener. Maybe it was. Fourth waves are typically longer due to the law of alternation. Because we had a pretty deep second wave that was fast, expect a slow and sideways fourth wave. So while the equities markets may be rebounding, as it looks like we have an impulsive development here in the futures, we may actually get our lower low, our final low, while the stock market gets a second wave. So the stock market may be a little bit ahead where we get a 1-2 setup. And while, again, we have a higher low for our second wave in the stock markets, we may see a lower low to finish off the crypto crash. So we're going to see what happens. Again, do not panic sell. This is not the time to sell because it's far more dangerous to miss the furious reversal we will very likely be seeing across pretty much every asset class, maybe even including bonds. I'm going to have plenty more updates coming your way, so subscribe. That way you don't miss them. Get ready to buy. Till next time, thank you for watching and happy trading.